Happy Thanksgiving. This is about the 35th year that we've come to the panhandle of Florida for Thanksgiving. My son Trent now lives down here, but it got me to reflecting on the last 35 years, and I've realized I've seen this movie before. That is to say, we're in the midst of what has been a run-up relative to NVIDIA, a segment of the semiconductor world, and in anticipation of AI, we've run the Magnificent Seven up substantially. And I've realized I've seen this movie before. I saw it in the dot-com bubble. I saw Cisco go crazy and then not hit its high in the early 2000s again until just recently this year. I saw Amazon go from $1.75 to $75.50, and then saw it come back down to $7.50. So I've seen this before, and then I saw it in the real estate crisis in the 2010s, and then we had a run up in the 2018. So it's a business cycle, and it's something that I've become aware of, and Trent has brought even more to my attention in the last couple of days. And with that in mind, we're going to start changing a bit our analysis process, and we're going to say it may be time to take some profits in anticipation of this pullback or this bubble that historically has happened. Again, as I say, in the dot-com, the subprime, and then the banking and interest rate crisis of past years. So let's take profits and be happy with the profits we have, and then position ourselves for what's going to happen next. We know, at least I know, that Amazon, Google, Microsoft, and Meta have put themselves in a tremendous position with the assets they have and the money and the talent they have to really cash in on this AI surge that is going to happen. Again, comparable to the data surge of the 2000s from the dot-com bubble, which turned into the data surge. And we need to recognize that there is always an overexuberance. Even on a more recent scale, we saw the overexuberance around EVs. We had all kinds of companies jump into the market, both Chinese and local, hydrogen and gasoline and electric. Everybody had something, and everybody had a SPAC to fill the gap. But they all went away, and the cycle started over again. So I think we're in a position of pullback. So with that in mind, my emphasis is going to be identify the stocks that didn't participate in this run-up because of the lack of enthusiasm around semiconductors, because of inflation, because of high interest rates. You didn't buy a new refrigerator, and you didn't buy a new PC, and you probably didn't buy a new car. But those stocks will probably see their day in the next 1 to 2 years as the overbought stocks, such as, I believe, NVIDIA and some of the air conditioning stocks like Vertiv, where we've got good profits in, and maybe we need to take some of our profits, reduce our positions, and then sit back and say, okay, what is the next thing that the world needs in order to make this AI invasion, revolution take form? And we all know that a big part of that is electricity. And so we need to do some analysis on those stocks that are going to be profitable, not those that are going to give us a rush, if you will, on the early stages, such as some of the smaller nuclear facilities, nuclear reactors that they're making. Again, we must realize that those are good ideas, but they come with some unintended consequences that regulation is going to potentially restrict and hold back what they might be able to. On the other side of the equation, we have a future administration, not that far away, who uses the words drill, baby, drill, who is very pro-American to the extent of levying substantial tariffs on our trading partners, most definitely China and some of the Asian countries, so as to level the playing field in manufacturing, but at the same time restricting some of those purchases that we might be making that would benefit countries like China. So we have to keep that in mind, and I think that is important enough that we look at our portfolios that we have today and we say, let's take some of the risk out. Okay, if in fact Microsoft and NVIDIA and some of these AI stocks continue to go up, okay, we'll have some of it, but we're going to have some cash on the sidelines just in case there is a pullback. I want to remind you again of my analysis or my comparison to this AI surge to that of building the highways in 1953 in the United States. The concrete companies made a lot of money, as did the rebar companies and the excavation companies, as they laid those highways across our country. Same thing happened in the .com era. As we laid the infrastructure for the internet that we all so enjoy, but really haven't maximized as of yet, there are some companies that made a lot of money. But the ones that really benefited from the highway system was ExxonMobil and the gasoline companies and the car companies. Those people who didn't build the infrastructure, but delivered the product to you and I. Because in the end result, the biggest spender, other than the U.S. government, is the consumer. I suspect the consumer even beats the U.S. government. But we're a broader group of people. So we need to look at this and say, could NVIDIA have had its day? Like the concrete companies, like the construction, have they had their day? And now someone's going to say, we're going to break this monopoly. We need those GPUs, but wait a second. Maybe we can design them. Maybe we can send them off to Taiwan Semiconductor and make them specifically for our business and make them more efficient and less expensive. And so generate competition for NVIDIA. And that would be Microsoft making its own chip, Amazon making its own chip, Google the same. So we need to reevaluate. That's my job. Okay? And I apologize to those of you who have said, when is Kerry going to get back from school and focus on what we are interested in, and that is the growth opportunities of the stock market that we invest in, not the growth opportunities that Goldman Sachs invests in. So that's my promise to you here on Thanksgiving, that I will refocus and I will redirect, and I'll share all that with you on the cheat sheet. The cheat sheet is going to contract and then it's going to expand. We're going to take some profits, we're going to reevaluate every stock that we hold, and then we're going to say what needs to go in there to take advantage of the highway is being constructed. It's not totally constructed, but they've run into some problems with heat in the distribution centers and heat on the silicone wafers. Who's going to come in, remember the word novitas, and correct that problem so we can get the infrastructure built properly, put in place, and then start to distribute it to the end consumer. And always remember, the end consumer is you and me, because there are more of us than there are of large businesses, small businesses, governmental institutions. There are more of us. And if they can get us to give them $19.95 a month for the rest of our lives, they will become the behemoths of the future. Now, again, I'm confident that will include Apple, Google, Amazon, Microsoft, and Meta, and possibly Tesla. I want to see what Elon does next. I want to see what Elon does in the U.S. government and how effective he is in changing the spending of the government. And we need to be focused on those things to know where to put our money. Now, I'm going to share this with you. I just did a verbal explanation of our website, and I want you to understand what we are doing. We are pooling the funds of a large number of people so that we can access the data at the same level that Goldman Sachs has. Now, they have employees of somewhere in the neighborhood of 46,000. We don't need that. We have AI on our side. We will bring people in that will give us access or help us gain access to more and more AI every month so that you can benefit from it. And again, what we're doing is building a company that will provide you with good current investment information, but we're pooling the expense. And right now, your share of the expense is $19.99 a month. It'll never get any cheaper, and it's accessing. If you could just see how much we spend on getting this information so that we can share it with you for $19.99, you'd say, I'll take two. Okay, happy Thanksgiving. I'm going to have this up and running the way I want it by the end of December. But if you want to get in on the ground floor and have a 14-day free trial, because what I do not want is you to spend your money on something that does not bring you value, exponential value. And I think I can do that, and you can be a part of it, and you can come grow with our community, because that's what it is. It's not a YouTube channel that tells you when to buy and when to sell. It's a community where the community tells you where to buy and where to sell. I think that's the best of the both worlds. In my last 14 weeks with Goldman Sachs, I learned a lot about how they operate, how they work. And all they're doing is bringing talent together and then selling it. And selling it at a very high price. To be a subscriber to Goldman Sachs, the ticket is $10 million to gain access to their knowledge, to their information. Over here at Best of Us Investors, it's $19.99, and it's free to you for 14 days to see if it's right for you. Happy Thanksgiving. I promise I'll put my focus back on your future rather than Goldman Sachs's from this point on. Happy Thanksgiving.